VICI Properties was one of the best performing REITs of 2022. It generated a total return of 13%, even as most other REITs dropped by 30%. But is it still a good opportunity for 2023? Hey everyone, this is Yossi. I run an investment firm that specializes in REIT investing, and I've gotten the chance to talk to VICI's CEO quite a few times over the past years. And today's video, I'm going to give you 3 reasons why I think that remains a good opportunity for 2023. But before I get into it, if you could please like this video, it will help me a lot. I just recently created this channel. Thank you very much. So reason number 1, I think that VICI owns the best properties in its net lease peer group. Most net lease REITs like Realty Income or National Retail Properties will target traditional net lease properties like Dollar General convenience stores, Taco Bell, quick service restaurants, Walgreens pharmacies, and there's nothing wrong with these properties. They can be great investments, but they're not comparable to what VICI is investing in. VICI owns mainly trophy casino net lease properties such as the Caesars Palace, the Venetian, the MGM Grand, and these are true trophy properties that are irreplaceable. They are mission critical to their tenants because they cannot simply move elsewhere. There is real brand value also in the building itself, and the casino license is also typically tied to the property. This property is also relatively low in new supply because there is high barrier to entry to build a new casino. These are really also built to last forever pretty much, and the risk of obsolescence is very low in my opinion. And so now compare that to a typical Dollar General type net lease property. These are typically built very cheaply. They are designed to last around 20 to 30 years, give or take. Your tenant also isn't as tied down to your specific property. If they cannot come to terms with you at the time of the lease renewal, they might just move across the street. There is always a lot more new supply hitting the market for these properties. There is lower barriers to entry. And finally, I also think that the risk of property obsolescence is also quite a bit higher. Just think about gas stations or bank branches as an example. A lot of these other net lease REITs own a lot of these properties. And so this is the first main reason why I like VICI so much and why I prefer it over most other net lease REITs. They are often compared and put into a same peer group, but really their underlying properties are not comparable. VICI's properties are much better. And then reason number 2, VICI's leases are also a lot stronger than most of its other peers. Its lease terms are longer. They're around 42 years at the moment on average, compared to just around 9 years for most of the net lease REITs. Then it also has greater annual rent hikes in its leases. They average around 2% at the moment, compared to only 1% for its peers. Then its lease is also true triple net leases, unlike many of its peers which have a lot of double net leases. And if you're not familiar with this terminology, a triple net lease essentially means that the tenant really pays all the property expenses but also the maintenance of the property. Whereas double net, typically your tenant might pay for some expenses but not all of them. They might pay all the property taxes, the insurance and the utilities and so on, but perhaps the roof or the structure, the parking lot might still be the responsibility of the tenant. And a lot of these net lease REITs, they have a mixture of triple and double, but VICI is 100% triple net leases. And so that's another advantage. Then another thing about VICI's leases is that they have periodic CPI adjustments. And so that provides additional inflation protection to the landlord, whereas many of its peers don't have any of those. They just have fixed 1% rent hikes every year. And so if we go into a scenario where you have consistently high inflation as we've had over the past year, that could be a big issue to them in the future. Finally, VICI also has master lease protections. What this means is that it will typically put a lot of properties with one tenant and the one single lease. And the benefit of this is that it forces the tenant to pay the rent for all the properties. It cannot just simply default on one property, stop paying rent for that one and keep operating another one because it's performing really well. With VICI, they are under one master lease and so they have to keep paying their rent. And so it's thanks to all of this that VICI was able to collect 100% of its rents even during the early pandemic in 2022, whereas many of its peers saw their rent collection rates drop to 70 to 80%. Not just that, VICI was also able to hike its dividend by 11% in 2020 and another 9% in 2021. That was a time when many net lease REITs were actually considering to cut their dividend. So this really shows you what's the benefit of having strong leases. And finally, reason number 3, I think that VICI Properties is today still slightly undervalued. Despite owning arguably the best properties in its peer group and having some of the strongest leases, it's today still priced at a small discount relative to some of its peers like Realty Income and Agri Realty. I think it should be the opposite because of what we explained earlier. VICI was one of the only net lease REITs to collect all of its rental income during the pandemic. It also managed to grow some of the fastest, and today it still enjoys the strongest leases and has the best properties. So I think that over time, as the market recognizes this, it's going to re-rate the company at a premium valuation. If today you price it around 18 times FFO, that will give you a share price of around $40 per share. And that's around 20% above today's share price. And so I think it's still quite attractive. It's still a bit undervalued. While you wait for this upside, you get a 5% dividend yield. The company also keeps growing at around 5 to 7% per year. That's what we expect in the coming years. So you have a clear path to double-digit total returns from the yield and the growth, and then there is another 20% upside on top of that to be earned over time. And so to recap, I'll put a table here on the screen that still summarizes all the differences between VICI's properties and those of its net lease peers. Feel free to pause this if you want to look at these in more detail, but once again, I think that once you take all of this into consideration, it's hard to argue against giving VICI a premium valuation and still hasn't earned it today. Finally, if you want to learn more about VICI Properties, feel free to go check out my REIT newsletter called High Yield Landlord. We recently posted an exclusive interview of the company's CEO, and you can actually read it with the 2-week free trial that's offered by Seeking Alpha. I think they do ask you to give your credit card, but they won't charge you anything in the 2 first weeks, so feel free to just take the trial and cancel right away if it's not for you. Thanks a lot. Please like and subscribe. See you at my next video.